Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for October 17, 2019. Today we're taking a look at the AUDUSD, the Australian versus US dollar, for today's trade analysis. Now, in the live daily trade room, we've been taking a look at the fact that this currency pair been at significant historic lows. I'm going to go out to the monthly time frame real quick so you can see where we are in the grand scheme of things. We're going all the way back to 2009. Vertical red line here. Beginning of 2009 was the last time we saw the market around or near this price level that we're currently at. It's kind of hard to see it with all the black lines, but you get the picture. We have not been here in quite a long time. Down to the weekly, you can see if I zoom out on the weekly, there it is back there. There's that red line, and here we are down here at the bottom right. Back to the daily. So you're starting to get a clue how significant this historic support low is around the 66.75, 66.60 level. The orange shade area at the bottom, ultimate support low all the way back to 2009. In recent weeks, we've seen some indecision by the market. Doesn't want to continue to go down, doesn't want to turn around and go back up. It's tried to do both things. We've seen multiple spikes down here towards the orange zone. We've seen a rally trying to go higher, but suddenly turning back lower, making a new low again. So market's trying to figure out what to do with this historic support low. At the current point, the market is bullish for the Australian dollar. If we just take a short trend line and put it like this, you can see we've been rising for the past couple of weeks, three higher lows, and today making a higher high for the Australian dollar. So that's good news. We see some efforts of the buyers to turn this back higher again. So the question is, will it continue to go up, or will it just suddenly turn right back around and go back down again? I think partly in due to what's happening on the dollar. We see the US dollar going down. We'll look at that later on in the trade room today. That's helping this to push higher. As the dollar falls, this goes up. We also saw some pretty decent employment data out of Australia yesterday evening. And so this is pressured higher into a new high. 68.30, 68.40 is the orange shaded area that the current market price is challenging right now. Now, I'm never going to suggest that you buy at the highest point of the trend or the move or the day. That's just never going to be something I'm going to do because you run the risk of buying at the highest high and it turning back around and making a pullback or reversal. So I'm never going to suggest you buy it under resistance. So there's really only two reasons we're going to buy the current momentum trend sentiment for the Australian dollar. One is it breaks out above that orange zone, 68.40, and continues to go higher. Next resistance level would be this blue zone, which is 68, 65, 68, 80. And that's not too hard to see if you look back to the left where it found resistance right here. So it'd have to get through the orange zone 68.40 before I had that expectation. So if I'm not buying a right now, when do I buy it? In the direction of current trend momentum and sentiment, I'm looking for a pullback to the green shaded area. 68.10, 67.95 would be the opportunity to buy it. Does that mean I should sell it? Not necessarily. I mean, there could be reasons to go on an intraday short opportunity from the orange zone, specifically if the US dollar finds a base of support and goes back up. We'll look at that in the live trade room later on today. But if the dollar makes a turn back higher at support, then we might see a little bit of a pullback. Ideally, what we're going to see is the Australian dollar pull back to the green zone, the US dollar pull back into resistance, and then we take a short dollar long Australian trade where we could buy this at 68.10, 67.95, the green shaded area. Let me give you a good example of that happening, and I'm just going to circle it here. The last time we broke above the green shaded area, right here where the circle is, that was the last time we got above the green zone and eventually made the new high into the blue shaded area. Let's take a look at that on the 4-hour time frame. I'm going to have to zoom out a bit like this and pull this down here. So there it is right there. There is the last time the market got above the green zone. Interesting enough, sat down on top of that green zone before continuing its efforts higher. Again, it touched the orange zone. Let's zoom it in on that a bit and scroll back. There it is. It went up, touched the orange zone, pulled back, touching the green zone, and then continued to go up. All right, so let's consider that, then bring it back over here to the current time frame. So here we are at the orange zone. So really the ideal situation is that it makes that pull back to the green zone, and then we buy it for the next long opportunity. that gives us lower risk. So think about where your risk is. We'll talk about that actually later in the trade room today, how to manage your risk versus reward. But right now, don't buy it here. Maybe a pullback to the green zone becomes a buy opportunity later on. Intraday shorts may be something that you could consider. Just be careful and look for the setup here into the orange zone for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.